Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about all of my dividend income for the month of April. If you guys do enjoy these types of videos, make sure to subscribe to the channel, and as always, we'll begin by taking a look at my portfolio dashboard. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. As you can see at the top of the screen, I have invested $29,000 into my portfolio thus far, and my total value is sitting at $38,062. That gives me an unrealized gain of $9,024 or a 31% total return, which is I think the highest we've seen on my portfolio so far. So that's amazing. Just a couple weeks ago, we were sitting at a total return of about 25%. So that's been a nice rebound to the price of my positions. My dividend earned so far has been $922, and my yearly projected income, that's the income going forward each year, is about $690. My current yield for the entire portfolio is about 1.81%, and my yield on cost is 2.38%. My cash position is sitting at approximately $2,000, and I have a total amount of holdings of 24. It means I haven't added any new holdings since the last video, and I haven't sold any holdings. Now, if you guys have been watching the channel for a while, you will know that I actually haven't sold any positions on the channel so far, but going forward, I might actually decide to do some trimming just to lower the amount of stocks I have to keep track of. Down here, we can see the amount I've invested each year and the dividends I've received for each year. So in 2020, I invested $2,800 and I only received $12.45 worth of dividends, which is pretty pathetic. But if we look right now at 2023, I invested $9,759 last year and I received $459 worth of dividends. So far this year, we're only about 4 months in. I've invested $3,000 with a total amount of dividends received at $190. And my yearly projected income, like I mentioned before, is $690. So it's already more than we would have made last year. Based on the graph right here, we can see that 2024 is really close to breaking that number from 2022, which was $191.87. So we're about $1 away, and I'm sure that this month in May I will be breaking that amount, and of course, hopefully by the end of the year, we'll be breaking the record for 2023. This graph right here just breaks it down by month. You can see how it's trending up over time. We'll take a better look at this graph in a bit once we look at my monthly breakdown for my portfolio. Now, in terms of dividend income, my highest payer is actually VOO, and we can see that it makes up about 35% of my portfolio, with SCHD following closely, and that one makes up a little less at 12.7% of my portfolio. Coming in third is altriagroup, or MO, and that one is not such a big position in my portfolio necessarily. It's around 3% of the portfolio, but it does pay a way higher dividend yield, which we'll see in a bit. So now, for the real reason that you guys are all here, let's take a look at my dividend income this month. This is a smaller month for me. I only received a 50-cent dividend for Coca-Cola, which amounted to a 0.008 share reinvestment at about $62.50 per share. And I also received a dividend from altriagroup, ticker symbol MO. That one was way bigger at about $22.69, which was about half a share of altriagroup. Now, usually I do show you guys my dividend reinvestment transaction directly from Vanguard, but this month I decided to just show you guys this order history section, which is what I use to actually populate the different sections of my portfolio or my spreadsheet. If you guys prefer the older version where I show you the actual transactions, let me know down below and I can definitely add those back in for future videos, but I just figured this kind of saves some time and cleans up the process just a little bit. Now, taking a quick look at Coca-Cola, we can see their current dividend yield sits at about 3.09%, which gives them an annual payout of $1.94 per share. Their pay ratio is 68%, which is definitely higher than what I like to see, but for such a well-established company, this is of no concern at all to me. On the other hand, their 5-year growth rate is sitting at 3.5%, and I would much prefer a company to have at least 4.5% if I'm going to be holding it long term. I will give them credit where credit is due, and they have consecutively grown their dividend for the past 61 years, making them dividend king, which is definitely a good sign. Similarly, Altria is also a dividend king, and they have 54 years of consecutive dividend growth history. Their dividend yield sits much higher, 8.77%. If you guys have been watching the channel for a while, you know that I prefer the dividend much lower, under 2%. Now, the reason I did purchase this stock is because I did want some higher yielding positions in my portfolio, but I think I've satisfied my appetite since then. The current payout ratio is sitting at 78%, which objectively is very high, but I'm not too concerned because the management has actually reiterated multiple times that they want to pay out most of their cash flows through dividends. Their 5-year dividend growth rate is sitting at 4.59%, which I think is excellent for such an established company. And of course, it's no Visa or MasterCard, but for such a high dividend yield, 4.59% is very solid. If they continue doing this going forward, I'd be very happy. Now, in terms of buys this month, I actually haven't done too much activity. I bought one share of United Health, which was actually a whopping $450, which is why I only bought one share, and that's just to add to my existing position. I also bought one share of Tesla, also to add to my existing position at $140 per share. Now, in terms of Tesla, I try to keep it on the smaller side of my position. I don't want to be too overweight in that company. It's a very volatile and I would say slightly risky company, but the price kind of dipped down below my cost basis that I really bought it for, and I thought it was a good price to jump into a position once again. Now, after earnings, the price did rebound significantly all the way up to like $180 in the next 2 or 3 days. But since then, it started dropping once again. So I think in the summer, there might be some good price dips once again. And I might actually buy some more shares if it dips low enough. Now, this month, there wasn't too much buying activity, but if you guys do want to see a breakdown of my monthly portfolio update, just let me know down below, and I can definitely make that into a separate video where we take a deeper look into how my portfolio has changed or not changed, any sort of gains or losses we've had per month, and not just the dividend income. Now, one thing that I did go ahead and add to the portfolio is the money market dividends. I think this will be helpful to kind of see where some of my other dividend income is coming from. Right now, I actually don't add this dividend income into any of my calculations, so it's not actually skewing any of the results of how much I'm earning each month. I just thought it'd be a nice other thing to look at since I do keep part of my portfolio in cash. As you guys may have seen on the portfolio dashboard, right now about $2,000 my portfolio is in cash, but before October of 2023, I actually had a significantly larger cash position, which is why these dividends were much higher, $54, $39, and it kind of adds up over time. So since starting my account in 2020, I've actually received about $430 from dividends for the cash sitting in my account. Taking a look at my monthly breakdown, we can zoom into 2024. We can see how much I've been paid each month so far. So $23.19 is definitely not my highest month this year, and it's not going to be the highest month at all. It slightly manages to beat out January. I believe that one was only altriagroup. That was the only dividend that I got paid that month. But we can see here highlighted in green, I have conditional formatting to show me the largest month that I've been paid in dividends so far. So the most important thing to take a look at here is that overall the trajectory is going up, and as we have more months added onto this graph, it'll be a clearer and clearer line kind of trending upwards. The reason some of the months are so much higher than others is because of the large weighting that I have in ETFs, the SCHD and Vanguard VOO ETF. So I filtered out my holdings so we can take a specific look at the companies that paid me a dividend this month. That's Coca-Cola and altriagroup. My average price paid for Coca-Cola is $54.74, and the current price is sitting at $63.26. The reason it's highlighted yellow is because the price right now is kind of close to my average price paid. I believe it's about 20%, give or take. Now, in terms of altriagroup, I purchased 22 shares at $43.29. That is the average price I paid for it. Some of them, of course, were cheaper. Some of them were higher, but the current price is $44.90, which is highlighted in red because it is very close to my average buy price. Now, my Coca-Cola position is not very substantial at all. It's still only 1.046 shares, even with dividends reinvested. But we can see that my altriagroup position is actually growing pretty quickly. It's now sitting at 23.664 shares, which means I got more than 1.5 shares back just from dividends being reinvested into the company. Now, in terms of gains, my Coca-Cola position is sitting at a 21% unrealized gain, and my altriagroup position is sitting at 11.5%, which is not bad at all, especially for such a high dividend yielder. Over time, I hope that the price will stay consistent and that with dividends being reinvested, I'll continue to increase that percent change for my altriagroup position. Now, as is expected, since Coca-Cola is such a small position of mine, it's only earned about $2.81 worth of dividends since I purchased it, whereas altriagroup has earned $72.20. Now, this is a substantially larger position than Coca-Cola, which I understand, but that is definitely part of the reason that I want to maybe sell my Coca-Cola position. I just don't think it's substantial enough to keep holding. Now, to further emphasize that point, we can see that my allocation Coca-Cola is only 0.2%, which is really not, substantial at all. It's not going to make an effect on my portfolio performance, whereas altriagroup is closer to 3%, which is right where I like to see it. I wouldn't actually mind it lower at about 2%, but right now 2.8 is totally fine. As we'd expect, altriagroup's yield is very high at 9%, and my yield on cost is higher at 9.31%, both because of those dividends being reinvested and the lower price that I had bought it at compared to today's current price. As always, if you guys did enjoy today's video, definitely subscribe to the channel if you haven't already. I would really appreciate it. I post weekly investing videos, and if you haven't watched my latest video where I go over Starbucks and my thoughts about the company, check it out right here. If you are interested in seeing me review somebody else's portfolio, check out this video right here. And if you guys want to see any other type of content on the channel or have any other advice at all, definitely leave it down in the comments below. Don't forget to mention how much dividend income you received this month and from which companies. Thanks again for watching, and I'll see you in the next one.